How's it going, everyone? It's Louis Crypto here, finally back with another Quant update. Unfortunately, Quant didn't give us that pump that we were expecting yesterday. It had a little bit of a pump that did reclaim that 20, but unfortunately fell back under and confirming it as resistance with this shooting star. This is a negative candlestick pattern. It's actually suggesting that price should continue lower, but as we are still holding that $100 key area of support, this is going to give us opportunities to bounce from this lower end of this range over here. So we can clearly see that we're trapped between this $2 area between 100 and $102, this being our resistance over here, where we've had multiple wick rejections in the past. So it's just clearly showing us that we're in a range bound market at the moment, and we're waiting for a significant break either below $100 to head more towards about 94, 96, or to break past $102 to now reclaim these key moving averages and head to about $104 where this 4-hour 200 EMA is. So yeah, we had some predictions yesterday. There were a lot of cryptos setting up like Bitcoin, and then the alts that we were suggesting would pump, just like H-bar did pump, and we of course profited over there on H-bar. But the same setup on Bitcoin did not actually come and give us some profit. There was a big liquidity grab yesterday where it hit a bunch of stop losses and it started to come back up. We didn't get the same thing here on Quant, but we saw it with Bitcoin. It was much more volatile compared to other alts, which is quite crazy to be honest. But yeah, we saw a lot of alts just like your H-bar and Gala going up crazy yesterday. But yeah, we just didn't actually see Bitcoin follow through. And yeah, that's potentially why Quant is like in a standstill moment. Some alts are going up, Bitcoin's not really going up. It essentially is suggesting to us that it needs Bitcoin to pump in this scenario over here. But what we can see at the moment, if we do zoom in on the 4-hour over here, and I will go down to the 1-hour time frame, we've got this potential inverse head and shoulders here. It is very rough at the moment, but what I can see is a shoulder followed by a head and followed by a right shoulder over here. So we would need to see a breakout, and to be honest guys, I would personally just use that 55 moving average over there. So I'm going to draw it out for you, but essentially it's just going to reiterate, or yeah, pretty much what I just said, which is a pump to the 200 EMA. So yeah, we can see that exactly. If we validate this pattern, you go to the 200 EMA. We didn't really need that because the moving averages are guiding us with that. We're trying to break back above the 20, and that the only thing that stands in the way before a pump from the 20 over here to the 200, which could be a nice 3% pump, is this 55. So yeah, we just need to be careful. Look over here, we had a big green candle engulfing the previous, looking for that bullish continuation, and then when we came to that 55, we got harshly rejected. So that is where we need to break through, and then we do get this pump. Of course, until then, we do remain ranging between $100 and $102. I can go to the daily time frame, and I will go actually to the 2-day time frame as well before scaling down to the 1 hour afterwards. If you haven't already, please do subscribe guys. It really does help the channel grow and get more eyes on the videos. So if you can like, comment, it'd be really appreciated. There's over half of you that are unfortunately not subscribed, and if you were, we'd be very close to 7k, so go ahead and smash that subscribe button. And what we can see on the daily time frame is that currently price is bearish. We need price to actually break past all the way up here at $114 essentially to flip this daily trend into an uptrend. But although we are technically bearish in this downtrend, there's one significant level that is keeping us bullish, which is this $94 to $100 region. And while we are still above that, it's going to give us opportunities to break to the upside. Although the pressure, the weight on our shoulders is down, we're basically feeling this bearish momentum over these last few months, which I've been calling ever since November last year for this downward scenario to head back over to this DCA buy zone. And every single time that it's entered this area, we have been buying in the chat. But we are prepared for price to head lower to the $83 support region. And so if we were to ever lose this $94 to $100 support, that is where we would be targeting, simply because we have this previous head and shoulders pattern that is still valid, as we are yet to reclaim the neckline, which is this ascending parallel channel over here. We also previously had a diamond pattern that is still valid. We broke to the upside a little bit. We fell back underneath. This is not a good signal. In the last days, we've confirmed it as resistance. This previous uptrending support over here now is resistance, as well as the moving average averages, as well as this golden pocket over here. So in fact, guys, we should really and truly go down from this point. And so the key levels of support being 94 is what's at the moment not allowing this to be the case, because as we have faked out to the upside, meaning that it was on the path upwards to its target at $130. That's why we prepared for this target up at 174, because the diamond pattern target would take us to there. Then we would be back above the head and shoulders bearish neckline. Then we just need to hold its support, break through this 0.5 Fibonacci, and you head to the 0.6 Fibonacci. So we could have had an incredible pump from today's current price, which would be like a 674% move. But unfortunately, that breakout over here resulted in a fake out where we failed to hold the moving averages as support and form this EMA repel, which I told you guys about. And as essentially, when we were talking about this EMA repel, what I was suggesting to you guys is that when an EMA repel happens, it sends you in a slingshot motion to the downside. And I essentially said the same thing back over here. And when we were looking to the left, structure giving us clues, we failed to form that bullish cross and price came back to the lows. So that's what we were saying over here. We're expecting price to come back to in and around this area. We've come back down to there. There is still as a target if we were to lose $100. That is why I suggested 94 to around 96, 97. Okay, I guess it's 97. I was saying 96 before, but I guess it's 97. So that's where we would be targeting to the downside. Again, I can actually get some new targets for you as we ran into that golden pocket. What I can do is measure from $100 up until $108, and it gives us those targets to the downside. So we have that confluence over here, those exact same prices that I was just previously suggesting. Anywhere between $94 to $97 is a key area of demand over here. So what I'm going to do for you guys is mark this out all the way down to here. I know this is very annoying because there's just 100 million boxes, and that is true, that is a fact. Let me try and make this a little bit clearer. I'm going to keep this box over here because we had previous wicks of support, but I guess I can take out these resistance levels because yeah, we can see them being respected anyway. But let's now scale over to the 1 hour time frame. Oh, before we do so, let me go back now to the 2-day time frame just to see what the moving averages are actually saying. We can see the 55 being respected very nicely. Where we saw that diamond pattern fake out, it was just running into that 55, which was also that golden pocket, I think it was. And so yeah, since that point we have just been coming back down. What I will do is go from this low to this high, and we can see that we are still above the 786 fib, which so happens to be $99. So while doing so, again, this is still technically support. There are still chances of bouncing from this location. What I would need to see is Bitcoin to confirm that it yesterday was a liquidity grab, and that it is actually still going, should go on that, well, not that should, but hoping that it was a liquidity grab to go on that bullish path that we were yesterday expecting, not only on Bitcoin but across alts. And we did see it on some alts like your HBAR, like your Gala. There were a bunch of other cryptos going up yesterday. I just can't think of them off the top of my head, but coins like Quant over here did not manage to pump, maybe because it is more following Bitcoin, and Bitcoin actually did dump while alts were pumping yesterday. So mini alt season, if you want to say it. I don't really care, but I guess you can say that because Bitcoin wasn't really doing much. It was actually going down while we had coins like HBAR over here, which I just made a video on. So make sure after this video you head to that one, or you probably already watched it. And then we saw that bullish continuation over here for HBAR when we scale down to the lower time frames. So essentially what we were saying, just as we were in the Bitcoin and Quant video, you had a low over here and a higher low, and so we were above the moving average, so price should continue higher. But unfortunately, as we looked at, and so we saw the same with Gala as well. I want to just check if there were any other cryptos. See, VeChain at the same time looked exactly like Gala, where we had these higher lows, and exactly like HBAR, where we had these higher lows, but just went down. So the very similar thing with Bitcoin. This was that trade where it came back pretty much to that stop loss, grabbed our liquidity, which was my ass, and then we reversed, and it looks like it still is going to try and go on that similar path. So maybe I would look to enter again, but with stop loss below this point at the moment, it's no worries, because we of course profited last week, and with that risk to reward ratio, it doesn't even matter if I'm wrong more times than not. Because of the risk to reward ratio, I can be right anywhere between 33 to 50% of the time, and I will come out profitable. So if you want me to teach you more about that, how you can actually become profitable by losing more than winning, then just hit me a private message. Again, we are investing in cryptos as well, so if cryptos were pumping, we're of course catching those as well. So H-bar, we did actually catch this as well very nicely, and we're just simply waiting for Quant to get moving, guys. So if we now scale down to the 1 hour and finish off today's update, what I'm going to do is try and find a chart that actually doesn't have gaps, just like this one over here. So what I can see is that we topped out with this head and shoulders pattern, a usual topping out pattern over here, and essentially returning back to the lows. So this was that EMA repel, I guess, over here, where we, if I go maybe over to the 4 hour time frame, if you can see it. Yeah, it was over here. So if you can just ignore this blue one to the left over here, and we just look at the orange and the purple, can you see how they failed to cross? That is EMA repel again. So pretty much reiterating what I have been suggesting this whole update and giving you this very valuable information. EMA repel sends you in a slingshot motion back in the trend that you were originally in. We were trying to go in an uptrend and it failed, so we get sent back down to where we were looking for those lowest bodies. So this is a strategy that you could try and test out for yourself. Again, yeah, this is something that I do teach as well. If you need coaching, then just private message me. That's it for me today. Let me know your thoughts. Will this $99 support that I've just marked out on that other chart hold, or will we now look to head towards $97 to $94 and finally lose 94 and validate that $83 target to the downside out of that diamond pattern and head and shoulders pattern? Or can we now bounce from this area, reclaim all these key moving averages, start to head up higher to our range high? Yeah, probably get rejected again and then break out. There's a lot of work to do, guys. At the moment, we are on the bearish path. Although holding above that support, I will continue to buy. Prepared if it doesn't, but I will continue to buy as it does still hold as support. As support in the rule book is the bottom of the market. So while that is still being maintained, that $94 to $100 region, then I'm going to continue to believe that Quant will eventually break to the upside, but I'm not very foolish. I've been preparing for the last 7 to 8 to 9 months for a drop beneath $100. Thank you guys so much for tuning in. Don't forget to like, subscribe and comment, and if you have any further questions or want further guidance or join that Discord community, then private message me over on my Twitter. All the links you need can be found in the description down below. Cheers.